silanganan, alam ng puso sa dibdib mo'y buhay. Lupang hinirang, duyan ka ng magiting, sa manlulupi, di ka pasisiil. Sa dagat at bundok, sa simoy at sa langit mong tukaw, may dalagang tula at awit sa paglayang minamahal. Ang kislap ng watawat mo'y tagumpay na nagniningning, ang bituin at araw niya kailan pa may di magdidinig. Lupa ng araw ng walhatit ng sinta, buhay langit sa piling mo. Aming ligaya na pag may mga atin ang mamatay ng dahil sa'yo.
This can be you. Or this too. You may not see the possibilities just yet, but we do. At Metrobank, you have always been in good hands. We want to show you new opportunities, open a brighter future, spot potential, and be the bank that can move with you, change with you, by being with you every step of the way. That's meaningful banking from Metrobank.
Tech Corp is an emerging financial service provider. We offer various digital payment solutions to multinationals in Metro Manila and soon to the whole country. We believe that change is constant, so innovation is always necessary. By integrating blockchain technology in our offerings, client can enjoy our fast yet secure financial services at competitive rates. ATC Exchange is a soon-to-be-launched digital currency platform where clients can buy and sell cryptocurrencies such as Bitcoin. Investing in digital assets made more accessible and convenient. ATC Remittance App is an application dedicated to efficient money transfer and bills payment. Through the ATC Remittance App, clients can top up to their account to transfer money at their own convenience. Download the ATC Remittance app now and visit atcex.ph to start your digital journey.
Welcome. Good morning. Good morning, everyone. Welcome to the Manila Times 2020 Midyear Economic Review. To welcome us all, let us all welcome the President and CEO of the Manila Times, Mr. Dante Click Ang II.
Thank you, Ray. Honorable Dr. Benjamin Jokno, BSP Governor, Ambassador Benedicto Yuko, PCCI President, Mr. Ferdinand Tancinco, Metrobank Senior Executive Vice President. Ladies and gentlemen, good morning. Along with the coronavirus pandemic, the economy has been the dominant topic in daily news reports. Still, we cannot seem to get enough information about it. Like many of you, we are glued to the latest updates and are driven to dig even deeper. The intense interest, of course, has to do with assessing the economic damage that is still evolving and looking for prospects of recovery. This interest keeps many of us drawn to briefings and updates on the economy like this forum this morning. Today, Bangko Sentral ng Pilipinas Governor Jokno has once again graciously accepted our invitation to speak, this time to present his mid-year economic review, along with the BSP policy directives and initiatives. Thank you, Governor, for being so gracious with your valuable time. And since we are here to listen to the Governor, let me conclude by expressing our appreciation to all those who made this forum possible. So on behalf of the Manila Times, thank you to our special partners, Atom Trans Tech Corp, Coexstar, Citibank, and the Metropolitan Bank and Trust Company, and of course, our official media partner, the Manila Times TV. Thank you also to all those joining us today, those watching this forum on the Manila Times website, the Manila Times Facebook page, the Times channels on YouTube and Dailymotion, and other social media platforms. And of course, today's event will also be reported in our print and digital editions tomorrow. So on behalf of the Manila Times, welcome, and may you all have a productive morning.
Thank you. The President and CEO of the Manila Times, Mr. Dante Clink Ang II. Now, let me introduce our keynote speaker for this morning. So Dr. Jokno is the current governor of the Bangko Sentral ng Pilipinas. Prior to his appointment, he served as the budget secretary from 2016 to 2019. On his third tour of duty at the Department of Budget and Management, he pursued an expansionary fiscal policy to finance investments in human capital development and public infrastructure. As governor, he is not only pursuing the BSP mandates of price stability, financial stability, and an efficient payments and settlement system, but also endeavors to bring central banking closer to the people. His policy expertise and research contribution extend to various areas of public economics. He has extensive experience in implementing reforms at the public sector, having also served as Budget Undersecretary from 1986 to 1991 and Budget Secretary from 1998 to 2001. He is the Professor Emeritus of the University of the Philippines, Diliman. Over more than 40 years, he taught the various courses in economics and public policy. He was also chairman of the Board of Trustees of the Pamantasan ng Lungsod ng Manila. He served as fiscal advisor to the Philippine Senate. He also served as chairman and CEO of the Philippine National Oil Company and chairman of the Local Water Utilities Administration. He finished his bachelor's degree in public administration from the University of the Philippines and earned his master's degree in public administration and economics from the same university. He also holds a Master of Arts in Political Economy from the Johns Hopkins University of Baltimore, Maryland, USA, and a PhD in Economics from the Maxwell School of Citizenship and Public Affairs, Syracuse University in Syracuse, New York, USA. Let's all welcome BSP Governor Benjamin Jokno.
Thank you, Manila Times President and CEO Dante Clink Ang II, Ambassador and PCCI President Benedicto Yuhico, Metrobank Senior Executive Vice President Fernand Antonio Tancinco, other Manila Times officers and staff, members of the media, ladies and gentlemen. Thank you for inviting me to the Manila Times online forum on the 2020 Midyear Economic Review. This morning, I will fill you in on where the economy stands midway into a very interesting year, including the latest development in the country's monetary, financial, and external sectors. I will also discuss some of the recent BSP policies, initiatives, and measures to help the Philippine economy during this trying time. As you know, the Philippines went through years of difficult but necessary economic reform. The result of this process provided steady anchor for the country's economic resilience. Our economy has weathered different economic crises, political changes, and natural calamities. Still, the current COVID-19 pandemic is a crisis like no other. This pandemic has morphed into a full-blown global economic crisis. Yet the Philippines has had strong economic fundamentals, such as robust growth, good fiscal performance, and strong external and financial sector positions, which provided relative stability in the face of the COVID-19 pandemic. In the first 6 months of 2020, inflation averaged at 2.5%. Monthly inflation has been on a decline since the start of 2020, from 2.9% in January to 2.5% in June. Year on year, food inflation decelerated, while non-food inflation also declined due to, in part, to lower domestic petroleum prices. Latest BSP baseline forecasts indicate that inflation could settle at 2.3%, which is at the lower end of the national government's target of 2 to 4% for 2020 and 2021. The instability of the Philippine banking system is also a source of strength for the domestic economy. As of end December 2019, universal and commercial banks posted a capital adequacy ratio of 15.4% on a solo basis and 16% on consolidated basis. This means that the bank's financial activities are supported by adequate capital, which is composed mainly of common equity and retained earnings. Quality of capital remains intact as universal and commercial banks industry posted higher leverage ratio at 9.4% solo basis and 9.9% on consolidated basis from its threshold of 5%. In addition, the banking industry has had low exposure to bad debts, with a non-performing loans ratio of universal and commercial banks at a mere 1.9% and non-performing assets ratio at 1.6% as of end April 2020. We also have a robust external payments position, which provides adequate buffers against global risk and shocks. In 2019, the country's balance of payments position recorded a surplus of $7.8 billion, a turnaround from the $2.3 billion deficit registered in 2018. For the first 5 months of 2020, the balance of payments position posted a surplus of $4 billion. The balance of payments surplus is due mainly to the foreign borrowings by the national government in April and May, as well as improvements in the current account balance, which countered the net foreign portfolio outflows and lower foreign direct investment inflows. For the first quarter of 2020, the current account posted a surplus equivalent to 0.1% of GDP due to the lower merchandise trade deficit and sustained net inflows of personal remittances from overseas Filipinos, which offset the impact of lower trade in services receipts. The peso has also been broadly stable, supported by the Philippines' strong external payments position. The peso, in fact, appears to buck the trend, as most regional currencies have depreciated against the US dollar. The peso closed at 49.25 on July 27, 2020. Year to date, it appreciated by 2.81%. One of the lessons we learned during the Asian financial crisis is the need to accumulate foreign reserves as self-insurance against currency crisis. and as of end June 2020, the country's gross international reserves stood at an all-time high of $93.3 billion US. This is enough to cover 8.4 months worth of imports of goods and payments for services and primary income. It is also equivalent to 7.3 times the country's short-term external debt based on original maturity. The country's favorable external debt profile supports the external payments position. As of end March 2020, the Philippines' external debt stock stood at $81.4 billion, lower by $2.2 billion than its recorded level in end December 2019. The decline in the debt level in the first quarter of 2020 was largely due to the net repayments made by the private sector, mostly by banks. It is worth noting that the Philippines' external debt metrics have steadily improved with a significant decline in the external debt to GDP ratio from 59.7% in 2005 to 22.2% in 2019, and further to 21.9% as of end March 2020. Our debt to GDP ratio remains one of the lowest among ASEAN member countries. International rating agencies affirm that the Philippines is likely to come out of the pandemic with little economic damage. Last July 16, 2020, Moody's gave a vote of confidence on the Philippines by affirming its Baa2 rating and maintaining its outlook as stable. In June, the Japan Credit Rating Agency upgraded our credit rating to A- from BBB+. Another Japanese rating agency, RNI, upgraded the Philippines credit rating to BBB+ from BBB in February. Both ratings are assigned a stable outlook. S&P and Fitch, on the other hand, have affirmed the rating of BBB+ and BBB respectively. The prestigious publication, The Economist, also acknowledged the Philippines' relatively strong financial strength based on 4 metrics, namely public debt, foreign debt, cost of borrowing, and reserve cover. It assessed the Philippines as the 6th best among 66 emerging economies and the 1st among the Southeast Asian peers. This slide shows the rating actions of the 3 global credit rating agencies, Fitch, Moody's, and S&P. As of end June 2020, 39 countries have been downgraded, while there have been 101 negative outlook revisions. Viewed in this light, Moody's confirmation of the Philippines credit rating of Baa2 with a stable outlook should be seen as a resounding vote of confidence for the Philippines. Nevertheless, the country's sound fundamentals will lend support to our response to this pandemic and propel the economy into a strong recovery in 2021 and 2022. One of the pillars of central banking is a safe and efficient payments and settlement system. On December 9th, 2015, the BSP and industry stakeholders launched the National Retail Payment System, NRPS, a policy and regulatory framework for the carrying out of retail payment activities through the BSP supervised financial institutions. Through the NRPS, the BSP endeavors to create a safe, reliable, affordable, interoperable and efficient retail payment system in the country. Under the NRPS, BSP also encourages the use of electronic payments or modern financial technologies to enhance the speed, convenience, and affordability of financial transactions. This method of electronic payments will be at the forefront as the new economy transitions into the new economy. As of March 31, 2020, PesoNet has 58 participating institutions, while InstaPay has 45. And both are expected to have more participating institutions in the coming years. The BSP is also encouraging the wide adoption of the national QR code standard, as well as the use of online payment facilities for government transactions. The launching of the eGovPay facility to digitize government collections and disbursements will lead to more efficient government collection, better audit, and enhanced transparency. It also aims to eventually plug revenue leaks. eGovPay will be expanded to enable ordinary citizens to digitally pay government tax, fees, and charges. The BSP plays a supportive role in the promotion of inclusive economic and social development objectives of the government through its advocacy program aimed at promoting financial inclusion. The National Strategy for Financial Inclusion provides the national vision for financial inclusion and a platform for public and private sector coordination to ensure synergy of efforts in achieving shared objectives. Meanwhile, the range of microfinance loans offered by banks has broadened from regular microloans to microcredit for agriculture, housing, and business, as well as microinsurance, in line with the growing needs and strengthened capacities of banks' clients. As of end 2019, a total of 154 banks with microfinance operations had been serving more than 2.4 million micro-entrepreneurs. The total value of microfinance loans extended as of end 2019 amounted to 27.3 billion pesos, 20.7% higher than its level in 2018 at 22.6 billion. Meanwhile, Credit Surety Fund program is a credit enhancement scheme that allows micro, small, and medium enterprises, which are members of cooperatives, to borrow from banks using the CSF's surety cover as security for the loan in lieu of conventional collateral. From its inception in 2008 until the end of 2019, a total of 55 CSFs located in 34 provinces and 21 cities have been established nationwide. Correspondingly, cumulative approved loans for 17,424 MSME beneficiaries reached 5.7 billion pesos. Amid this crisis, central banks around the globe are at the forefront to help their respective economies get through the uncertainties of this pandemic. The BSP responded by proactively implementing measures to ensure sufficient liquidity in the financial system, even as health and fiscal authorities impose measures that are addressed to the pandemic. The BSP's liquidity enhancing policies are intended to reassure markets, restore business confidence, and support recovery once the lockdowns are lifted. In the medium to long run, containment of the virus should lead to the resumption of business activities and economic growth, which should in turn encourage private sector investment and lending activities. The liquidity injection from BSP measures is estimated at around 1.3 trillion pesos, which is equivalent to 6.7% of GDP. Furthermore, the BSP approved a package of measures to further reduce the financial burden on loans to MSMEs. In particular, loans granted to MSMEs shall be counted as part of the bank's compliance with reserve requirements. These measures likewise complement early monetary actions taken by the BSP to shore up market confidence and cushion domestic economic activity, along with various time-bound relaxation of various regulations. For example, calculation of penalties on required reserves and single borrowers' limits, among others. With concerns of potential souring of loans coming from both businesses and households, the BSP deployed a range of regulatory relief measures that include approaches that could support the treatment and management of affected loans. The regulatory relief measures aim to encourage BSP supervised institutions to grant a temporary grace period for loan payments or to restructure the loan accounts of their borrowers. As we face the challenges and uncertainties from this continuing pandemic, the BSP reiterates its commitment to use its entire arsenal of policy tools and instruments in a timely and prudent manner to help cushion the economy from the potential fallout. The relatively benign inflation outlook in the policy horizon provides space for monetary policy adjustments to complement the national government's efforts in mitigating the adverse impact of the COVID-19 public health crisis. Moreover, the BSP remains vigilant in monitoring domestic and international developments for any other emerging risk to the outlook for both inflation and economic activity. Our experience with COVID-19 highlighted the increasing importance of digital transactions. The volume and value of the combined transactions of PesoNet and InstaPay surged during the lockdown. A comparison between the 2.5 months duration period prior to the lockdown from January 1 to March 16 and the period under lockdown from March 17th to May 31st indicates that the combined transactions of both PesoNet and InstaPay rose by over 70% in volume and 42% in value. By contrast, the volume and value of check payments and ATM withdrawals declined. Needless to say that looking forward, we will not only expand the reach of digital payments, but enhance its efficiency. Efficiency in retail payments is really about speed, convenience, and affordability, which can clearly be supported by a shift to electronic payments. The BSP envisions an accelerated uptake of e-payment services through digital platforms like the InstaPay and PesoNet in the next 3 years. It is our goal to have half of financial transactions in volume and value be in digital form by 2023, if not sooner. We have gained significant strides in this direction through the adoption of the national QR code standard, as well as the use of online payment facilities for government transactions. On the legislative front, the BSP will push for the passage of the following priority bills: the amendment to Republic Act numbers 1405 and 6426, the laws pertaining to the secrecy of bank deposits, amendments to Republic Act number 9510, or the Credit Information System Act, amendments to Republic Act number 10,000, or the Agri-Agro Law, the Financial Consumer Protection Bill, the Financial Institutions Strategic Transfer, the Government Financial Institutions Unified Initiatives to Distress Enterprises for Economic Recovery, or GUIDE, and the Bayanihan 2, or to Recover as One Act. To summarize, allow me to highlight three main points from the presentation. First, the Philippines entered into the global pandemic with stronger macroeconomic position compared with its regional peers. The economy is well situated to restart its economic growth and development process. Second, in response to the COVID-19 pandemic, the BSP implemented policy measures intended to reassure markets, restore business confidence, and ensure quick recovery once the lockdowns are lifted. However, let me assure you that the decision to unwind COVID-19 policy responses will be gradual, prudent, and evidence-based. A well-thought-out disengagement strategy is necessary. Lastly, the BSP remains committed to deploy the necessary policy measures and reforms to help the Philippine economy recover from the COVID-19 crisis and to build its resilience against future crises. Now, let me close with an optimistic note. All the numbers I've cited earlier are true. Numbers don't lie. The rating agencies agree, and the international observers agree. I foresee a hockey stick-like recovery with the lowest point in the second quarter. But the third quarter will be better, and the fourth will be even better. We expect a strong rebound in 2021 and 2022. The worst is over, but while we're not out of the woods yet, we have to look beyond this crisis. What else can we do to make the Philippines more robust and resilient? How do we prepare for the next crisis? Let me remind you again that we entered this crisis from a position of strength. So do I become hopeful or fearful? What can I do to calm the market, live with the virus, and prepare for a better tomorrow? I choose to be hopeful. Once again, thank you, and a pleasant morning to all.
Thank you, Governor Benjamin Jogno. So I am also hopeful, and I see the right direction towards weathering this global pandemic storm. Now, to deliver his message and reaction is Ambassador Benedicto Yuico, who has been elected as the new president of the Philippine Chamber of Commerce and Industry, or PCCI, the country's largest business organization. He was unanimously elected by the incoming 20-member board of directors of the PCCI during the recent PCCI annual meeting. Ambassador Yuico, who will occupy the position for 2 years, shared that his presidency will focus on entrepreneurship and innovation. He believes that these are essential catalysts that will supercharge the Philippine economy in the coming years. Furthermore, he will initiate projects to assist local government units to implement smart city technologies that will not only improve efficiency but reduce corruption as well. The new PCCI president has served as the special envoy of the president with the rank of ambassador for trade relations for Eastern Europe, then North America and Latin America. He was president for the Confederation of Asia Pacific Chamber of Commerce and Industry from 2010 to 2014, the fourth Filipino president in this organization's 50-year history. He got his undergraduate degree in business and economics at the St. Mary's College of California, and he graduated from the Wharton Graduate School of Business with an MBA in banking and finance. Ambassador Yuhiko is currently involved in the property business through various land banking activities, joint ventures, and partnerships. And he has organized the Center of Innovation and Entrepreneurship, a dynamic ecosystem that provides workspace funding, coaching, workshops, and mentorship. All right, so let's all welcome Ambassador Benedicto Yuhiko.
Thank you very much for that nice introduction. Honorable Benjamin Diokno, Governor, Bangko Sentral ng Pilipinas. Mr. Ferdinand Tansinco, Senior EVP, Metrobank. Mr. Dante Clink Ang, II, President and CEO, the Manila Times. Officers and staff of the Manila Times, friends from the media, ladies and gentlemen. First of all, I'd like to thank Mr. Dante Clink Ang II for the invitation to speak in the Manila Times Midyear Economic Review. Coming from the private sector, I will be sharing what we in PCCI have been doing to help our members survive the community quarantines that have dealt a severe blow to our economy. But first, let me share with you some relevant information about PCCI. PCCI is the largest umbrella organization of businesses in the country with an estimated 30,000 direct and indirect members. 23% of our membership is comprised of large firms. The remaining 77% are MSMEs. We have organized local chambers per geographical area. The National Capital Region, NCR, North Luzon, South Luzon, Visayas, and Mindanao. Each area is headed by an area director, vice president, supported by regional governors and local chamber presidents. We have more than 200 local chamber presidents. You will notice that we have on the map the Philippines, and those dots represent the local representations of PCCI all over the Philippines. Next slide, please. As early as April this year, when our members began to sound the alarm and government came up with figures on the jump of unemployment from 2.3 million in January to 7.3 million in April, PCCI already crafted and submitted its roadmap to recovery to President Duterte. The roadmap encapsulated key elements to recovery. These are epidemic control, resumption of economic activities, including the gradual opening of public transportation, and rebuilding business and consumer confidence. To concretize the roadmap, we launched a webinar series called Roadmap to Recovery, which was organized on 3 fronts. First is the Tayo Tayo Pilipinas Foresight Forum, a series of e-forums with policymakers on economic recovery programs and opportunities under the new economy. We had an interesting discussion at our general membership meeting in April with Trade Secretary Ramon M. Lopez, Economic Planning Secretary Carl Kendrick T. Chua, and Labor Secretary Silvestre Bello III, who talked about post-lockdown economic scenarios, short-term and long-term economic implications, the new normal, and economic stimulus programs that will bring the economy back on track. We had another forum with Congressman Joey Salceda, who talked on the Philippine Economic Stimulus Act, now known as the Accelerated Recovery and Investment Stimulus Act, or ARISE, which we had pushed to be included in the priority measure of the President. Currently, we are undertaking dialogues with our local chambers to assess the impact of COVID-19 on their members' business operations and generate recommendations to help accelerate the recovery process. In the pipeline are dialogues with our industry partners. Second is the Business Recovery and Resilience Series, which was co-organized by PCCI as part of the DTI-led MSME Week. It was a comprehensive one-week program that focused on capacitating MSMEs to build their resilience by making data available, mentoring them to craft and implement business recovery and resiliency plans, and to improve their access to finance. And third, and I believe most important, was this Innovation at PH webinars to support the transition of micro and small enterprises to the digital marketplace. This series is basically a how-to platform where our members learn how to make use of online selling and marketing platforms like Lazada, and eventually to be able to create their own websites to reach a wider market. If there is one positive thing that came out of the lockdowns, it accelerated the adoption of technology to adapt to the dynamism of the business environment and the changing consumer behavior. Let me just backtrack a bit. At the outset of my leadership in PCCI, I have adopted innovation as the core of my agenda and work program. I did not wish for an elaborate work program. My work program was simple and based on one word: innovation. This has proven to be very timely and relevant with everything that is now happening. Let me just also mention that innovation is the theme we have adopted for our Philippine Business Conference, which will be staging on October 7 and October 8 this year. Earlier, I mentioned about my dialogues with our local chambers, which we organized in our 6 geographical areas recently. The last of these dialogues took place just yesterday. While I expected to hear a lot of business closures and bad unemployment numbers, the numbers that were reported to me were very distressing. Consider, more than 50% of the businesses have closed. And those still operating or have resumed operations, employment is down to 30%. While some are adjusting, like hotels and resorts, for instance, that have repurposed their facilities into quarantine areas, the garments industry now transitioning to online selling, there are now those that are investing in manufacturing facilities for PPEs. About 20% say that lockdown is extended. About 20% of these businesses that are open say that if lockdown is extended by another month, this would already force them to close down their operations. And this is understandable because you cannot operate any less than 50% capacity and yet expect to earn enough to cover your overhead expenses. The outlook varies. Not all bad news. Our members in Mindanao and North Luzon appear more optimistic than those in the Visayas and South Luzon. And this is because Mindanao is a resource-rich area. Agriculture carries on despite logistics issues. There are potential investments, in fact, for businesses over there. They are encouraging people who are in the alcohol business to open up a factory. And they mentioned that medical supplies such as rubber gloves and other supplies are very much welcome and in demand over there. In North Luzon, it's also rich in agriculture and hosts a significant number of BPOs that have continued to operate despite the pandemic. I would also like to mention that one industry or area that seems to be operating better, actually, than compared to last year is the mining industry. Our chamber president in Surigao reported to me physically. He said, "Ambassador, I am seeing vessels going in and out, carrying ore that's been mined and then exported. So there are more vessels now compared to previous periods." So there you go. I think the government is encouraging. The DENR is actually saying that they will open up more mining companies, and this will surely help our economic recovery. Visayas and parts of South Luzon are suffering because about 60% of the employment are in tourism and related service industries. The industrial and eco zones in South Luzon cannot fully operate because of the community measures still in place. Among the common issues that contribute to the sense of uncertainty over the situation include: 1, difficulty in planning and not knowing how long COVID-19 will persist, and the possibility of return of lockdown measures. 2, cash flow and liquidity issues where financial support from government is not enough or not being filtered down to the grassroots. Small enterprises are also wary of taking out loans because it could lead to bigger loans, which could lead to bigger problems for them later on. Some of the MSEs have the slow response of banks in processing loan applications or restructuring requests. Spotty internet connectivity is number 3 in the list because it is making the transition to online marketing and selling a very difficult challenge. Next item, delays in transacting with local government for permits and licenses because frontline agencies either do not or cannot follow anymore the Citizens Charter or the prescribed deadlines set by the Anti-Red Tape Authority due to the community quarantine in place. Some government agencies seem to think that it's all right to just deliver the service 2 weeks from now or 3 weeks from now or 4 weeks from now, when in fact, they can actually deliver it in 2 or 3 days. Why they do this, I don't know. But I hope that this can be corrected. Item 5, lack of healthcare capacity, and in some areas, total absence of testing facilities. Number 6, transportation issues for workers and logistic issues for cargos, which must present various kinds of permits to checkpoints along the routes. This is just making it more difficult for the workers. And, when you delay very critical, important, or cargo that will expire, You cannot have checkpoints away from source to destination. I hope that this is going to be minimized. PCCI programs. To help in the recovery of our members, we have been implementing our own initiatives. One, partnership with a small business corporation to guarantee loans for PCCI members. We are making the same arrangement with the Philippine Guarantee Corporation. PCCI has engaged an expert to help our members restructure their loans or apply for fresh loans with banks and other non-bank financial institutions. This expert, by the way, used to work for a bank, so he knows in and out of the bank, he knows the attitude of the bank, so I hope that he will be of assistance to our MSMEs. Pinas Muna Tayo campaign to stimulate the growth of domestic consumption and jumpstart the economy by promoting local products, services, and tourist destinations. The President echoed our call yesterday, encouraging domestic tourism instead of going abroad. We have a partnership with the Anti-Red Tape Authority to ensure seamless transaction of business with the LGUs. This is critical considering the many restrictions we have to grapple as we go along our day-to-day business. On August 5, the ARTA and partner agencies will be signing a joint memorandum circular to impose the mandatory online filing and processing of application of permits, licenses, and gate passes for release of cargoes at the ports, as well as online payment of fees and dues. This, I would say, is another successful outcome of our advocacies, where we have been working with ARTA, the Department of Trade and Industry, and the Bureau of Customs to facilitate port logistics. PCCI will be a witness to the signing of the agreement. And we have our innovation webinar series to leverage the internet economy, which has been the economic lifeline of MSMEs. On the area of policy advocacies to accelerate the economic recovery process, we in PCCI continue to champion the following measures that need either legislative or executive action. One, for Congress to immediately pass the Corporate Recovery and Tax Incentives for Enterprise or CREATE Act and the Arise to revive the faltering economy. For the national government to, one, declare the resumption of economic activities, of course, following social distancing, health, and sanitation protocols. Yesterday, during a Zoom meeting with Secretary Roque, he said, okay, I get it. We have to open the economy. So there you go. I don't know what happens after that. In relation to the resumption of economic activities, we have to expand the representation of the private sector, if possible, to the IATF, so that we will be included in planning and formulating guidelines on quarantine measures. So, the IATF need not listen to us or need not implement what we have to say, but we would like to be able to make the suggestions because we believe that we are in the front lines of business. So we will be able to tell them or give them some tips that would make the implementation of the policies more effective and efficient. We would like to see an increase in the credit facilities for MSMEs. We would like to see the farm fishing areas to market roads, agri and aquaculture, infrastructure in the build priority projects. accelerate the automation and integration of government transactions and processes relating to business permitting and licensing, which have become crucial amid COVID-19 and physical distancing. I now conclude by saying that we in PCCI acknowledge the proactiveness of the BSP under Governor Diokno, which has been very quick to respond and support the needs, not just of MSMEs, but of the economy as a whole. We further welcome the pronouncement of President Duterte to pump prime MSMEs and to implement paperless transactions in government. No one knows when the COVID-19 pandemic will end. In the meantime, what we should do is to learn how to coexist with this pandemic in a manner that not only will we survive, but we will come out of this much stronger than before. Thank you very much and good morning.
Thank you, Ambassador Benedicto Yuico. So that's a great insights on the pandemic. Innovation is indeed necessary to jumpstart our economy. Our next reactor is Mr. Fernand Antonio A. Tancinco, or Toto. He is the Senior Executive Vice President and Treasurer of the Metrobank and Trust Company. He has oversight of the bank's financial market sector covering treasury, wealth management, private banking, institutional investors, and asset management. He also currently serves as the Vice Chairman of the Board for AXA Philippines and advisor to the Board of First Metro Investment Corporation and Metrobank China Limited. Prior to joining Metrobank in 2007, he was the Treasurer, Head of Global Markets, and Co-Head of the Wholesale Bank of the Philippine branch of Standard Chartered Bank from 1997 to 2007. He was Vice President and Head of the Local Currency Desk of Solid Bank Corporation from 1993 to 1997, and a dealer in the Treasury Group of Bank of Philippine Islands from 1988 to 1993. Toto holds a Chartered Financial Analyst or CFA designation from the CFA Institute and passed the Electrical Engineering Licensure examinations. He earned a Bachelor of Science degree in Electrical Engineering from the University of the Philippines. He attended the Advanced Management Program at the Wharton School, University of Pennsylvania, the AXA Fine Program in IMD, the General Manager's Leadership Program at SAID Business School, University of Oxford, and International Management Program at INSEAD in France. He was the National Achievement for Finance awardee by the UP Alumni Engineers in 2016. Toto is an active contributor to the development of the financial markets in the Philippines. He is a member of the Bankers Association of the Philippines Capital Markets Development Committee as Vice Chairman and member of the Open Market Committee. Let's all welcome Mr. Fernand Antonio Tancinco.
Hi, good morning, everybody. BSP Governor Diokno, PCCI President Ambassador Huico, Manila Times President Mr. Ang, Mr. Dutu, officers and staff of the Manila Times. Ladies and gentlemen, thank you very much for giving me the opportunity to speak to you today in behalf of the officers and staff of Metrobank. Next slide, please. The COVID crisis has to be taken into context. You know, my son calls me a boomer, although technically I am Gen X. But for those of us who want to put a perspective in this COVID crisis, let me put to you some of the recent events. Governor Diokno mentioned earlier that he expects economic growth to range between -3.4% to -2%. And I've heard some analysts say that the growth could go as bad as 10% GDP. So let's put this into context. What does a 2.3 to 2%, a 3.4 to 2% mean? And what does a 10% worst case mean? Some people said that, oh, this is as bad as World War II. But I don't think that this is the case. In World War II, 70% of our GDP was devastated as the war destroyed a lot of our infrastructure. So definitely that's not it. For those of you who are young enough, the true boomers can remember, the Aquino assassination in 1982 to 1983 actually caused our economy to decline by 10.5%. For the Gen X and the younger generation, maybe you can relate more to the Asian financial crisis that actually caused a 12.3% decline in our economy. And for the millennials, I think this is what you would probably recall. The global financial crisis in 2008 to 2009 was actually a 2.7% decline in our GDP. So within the range of what Governor Jacno mentioned, this is going to feel like a global financial crisis wherein, it was painful. A lot of our investment portfolios went down, but the pain was manageable. And at the worst case, this can be similar to the Asian financial crisis of 97 to 98. Next slide, please. Now, unfortunately, the pain of this COVID crisis is not distributed uniformly into our economy. Some of the industries are going to suffer much more than others. In fact, some are going to grow. And we're seeing that the highest hit of the industries are heavy manufacturing, light manufacturing, transportation and storage, basically where you would require a lot of people to come in. And especially if you would look at the discretionary spending like recreation, that I think would have to bear a bigger brunt of the pain. Having said that, if you look at other sectors, which is not very concentrated on the urban areas, agriculture, mining, and information technology, the impact will be much less. And if you move down the line to the basics, the utilities, you probably will not see any impact or probably even show some growth. So what are we saying? In the next slide, you would see that this COVID crisis is a crisis of the urban areas because the ones that are really affected by an ECQ or MECQ is the cities. And in the other areas of the country where the people are less congested, the impact is much, much less felt. So the two biggest areas that we think will get hardest hit will be manufacturing and wholesale and retail trade. And you would see this in the malls that will stand empty and manufacturing, where the people cannot go into their workplaces to work. So this is actually a lopsided crisis where in certain areas will get hit, while certain areas will feel some pain, but not as much. Now, if we go to the next slide, we can see that we are seeing some good signs, and we really support and encourage the impact of what Governor Jacno said and the BSP and our economic managers and what they've done for the country. I think they're doing the right thing. And if we look at the Purchasing Managers Index, which is a leading indicator, in the economic terms, a leading indicator is an early sign that the economy is picking up. We can see that the index has gone to near levels prior to the lockdowns. So what does this tell us? That purchasing managers are starting to buy for inventory again in the confidence that demand is going to pick up. So with this, I think that this is a good sign for our economy that confidence is starting to return. And this phenomenon is not only in the Philippines, but also in other ASEAN countries. And rather than, let's say, encourage people to jump out and say, hey, this is over, I'd like to caution you. People talk about V-shaped recovery, which is a quick recovery back to normal levels after a period of pain. We in Metrobank subscribe to a gradual U-shaped recovery. And why is this so? Because the means of production, the pain that has been encouraged, the workers that have been laid off, the companies that had to go out because they could not sustain operation will take time to rebuild. And so we want to caution everybody to gird for a longer pain. If you're running through your last reserves in this period, we have to think in terms of a marathon rather than a sprint. We have to keep our resources as long as possible because we feel that it will take time. Having said that, we feel that by 2021, we should see the recovery. And I think even if we see a drop of 2 to 3% this year, we should see a very strong recovery in 2021. Now, on the next slide, you would see that the government has actually embarked on a lot of borrowings to support their initiatives in COVID and also for the build. And I think that this is the right thing to do. Why? Because this build is actually an infrastructure building that will accelerate our growth. If you'd recall, during the time when they were doing the build, and traffic was at its highest, it caused such a lot of disruption. And now, if we can pull off these projects while the traffic and congestion is low, I think that we will wake up to an economy that is much stronger, and that the infrastructure we will wake up to is much better developed to support economic growth. So hats off to the government on this plan. And I hope that we can support and encourage the building of infrastructure during this period. Now, if we go to the next slide, so if you go to the next slide on major infrastructure projects for completion by 2020, we can actually see that there's quite a lot of them in the pipeline right now. So we see the Manila Skyway Stage 3 to be opened by 2022, Harbor Link, Clark, and a lot of others. And this is the kind of infrastructure we do need to build on our resiliency. So that's on the major infrastructure slide on the next slide, page 8. So there's quite a lot of projects to be built, and hopefully this will help us build the infrastructure and will propel our growth moving forward. And if we go to the next slide, one thing we have to remember is that we should not be pessimistic, because investors outside the Philippines, as Governor Jokno has shown in his slides, are actually more optimistic than us. This is an experience we've had. Metrobank in early July of this year launched a $500 million bond to the international market to secure long-term funding for our growth perspective. We received 5 times our orders for the $500 million bond. We received $2.6 billion of orders for our bonds. And these orders are from all over the world. We saw them from Europe, we saw them from the US, we saw them from Latin America, we saw them from either Asia. So that is how confident the rest of the world is to the Philippines. And we as Filipinos should be the most confident about our country. PLDT also had more than 10 times. They also issued a dollar bond, and they had more than 10 times orders for their $600 million bond. So did Globe, so did ICLTSI, and several other companies. Our rating is now investment grade. And unlike the 2008 crisis and the 1998 Asian financial crisis, wherein we were locked from the global financial markets, the markets are open to us right now. In fact, they're pouring money our way, if only we can tap them pretty well. So I think the key message is we should have confidence in ourselves and our economy. And on the next slide, however, we should also change our paradigm, because not all industries will get out of this crisis unscathed. For example, this is a very interesting study made by the World Bank based on Google Big Data. And the drop in hotels, restaurants, airlines, tourism, museums, basically discretionary areas, is actually tremendous. However, we see spikes up in demand of telecommunications, delivery, and online shopping. So to be able to navigate through this crisis, I think that we have to be prepared to reinvent ourselves and look at the markets or the economy with a fresh pair of eyes. And I think that we have to look at the opportunities, because opportunities still exist and abound in the market. So next slide, we should look at the behavioral shifts. Cheap airfares. I know that prior to the COVID crisis, we've been spoiled by the piso fares. In fact, one of the highest growth areas are what you would call the low-cost the budget airlines, right? My boss calls them the cattle class, wherein you're herded in and herded out of an airline as if you were cattle. But unfortunately, this, I think, is gone. I think that the air travel moving forward will be very expensive as airlines now put the infrastructure to keep their passengers safe. And because they cannot hoard or herd as many people into their planes as they used to, and they have to run fewer flights, then we have to realize that airfares will be more expensive moving forward, maybe by several factors. However, we should also look at the fact that there's going to be less traffic as people stay away from mass crowds. And maybe we should look at local travel and look at opportunities for local tourism. Transportation, another area, perhaps might struggle as the government and prudence imposes that we have to do social distancing even in mass transportation. But telecommunications, I think, is a bright spot. Malls might probably become less profitable, but there is opportunities in online selling, online. And same goes for other areas. Ride sharing will probably struggle, while delivery services will probably pick up. Fashion will probably be supplanted by suppliers of PPE. So I think that it is incumbent to us to look at behavioral shifts. And the fact that before central business districts would be so in demand will probably be less so moving forward, and as we move to decentralized business areas. So in the next slide, we would say we stay defensive in this downturn. As we said, it's going to be a U-shaped recovery. We are optimistic about telecommunications, basic consumers. I think banks will have to struggle a bit as we have to contend with non-performing loans. But the power sector should be pretty good. The property sector will probably have a shift, as some properties will have to be revalued better, while other properties that are pretty expensive might have to be recalibrated down to its economic value. So we recommend staying defensive and looking at the sectors very, very prudently. Now, on the next slide, you would see what our outlook on the Philippine stock market is. There are actually two ways to value stocks. One is the present value method, wherein you present value the earnings, the future earnings now, and the other one is the net asset value method. Right now, the earnings, the future earnings are unclear because we don't know how the new business models will look like. We don't know who the winners and losers will be, and how these companies can cope to the new paradigm. So I think right now, I would favor a net asset value approach to look at what companies have intrinsic value, not because of the intangibles that they have, but what they actually have as tangible assets. Interestingly, we see gold at all-time high right now, $1,940 an ounce. And why is this so? Because people are chasing tangible assets and shunning intangible assets. And even in the US market, we see the stock market doing very well because a lot of the US companies are based on tangible assets, meaning manufacturing plants, means of productions, and patents. And we think that we have to look at the markets very, very carefully. Also, look at the fact that we're looking at a 6:5 ratio at the end, 6:5 index at the end of the year, and we're seeing opportunities to buy the index if it crosses about 2 standard deviations or around 5,000 level. So perhaps buy at that level, but be very cautious and selective on your investment choices. Now, on the next slide, we would see that the peso has been appreciating. Yesterday, it closed below 49.20. And we think that this trend will continue, although our year-end forecast is still at around 50.10. And I'd like to also caution a lot of us who is cheering the strength of the peso. While it is a good thing that the peso is strengthening and also a vote of confidence by the international community on the peso, we have to remember that our source of competitiveness is a competitive foreign exchange rate. The US is purposely devaluing its currency to gain competitive edge. And we shouldn't fall into the trap of allowing our currency to appreciate and get that disadvantage. Our BPOs, our OFWs, and our exports are dependent on a competitively, properly priced peso. So we're looking at around 50 by the end of the year, but gradual strengthening to around 49 level by 2021, 2022. So we hope that the peso can be kept stable, but the strength of the peso will be driven more by the weakness of the dollar rather than the inherent strength of the peso. And I hope that we can be prudent about the strength of our peso. So in summary, our key points. First, we expect a gradual recovery. Guys, gear up for a long recovery. Conserve your resources, keep yourself healthy. Recovery will not come overnight. But number 2 is market confidence is returning, and we have to take advantage of this market confidence. Number 3 is we applaud the measures of the central bank and the national government in its efforts, especially in its fiscal and monetary stimulus. And we think that this is the right thing to do. But we need to allow these measures to take effect. And we should look at this as a long-term solution rather than a quick fix. And the 4th point we would like to make is that let's have confidence in the economy. There are green shoots coming out, and there's reason for optimism. Past the lockdown, we will start to build. And hopefully, when the infrastructures are in place, the economy will be stronger than ever. So, in behalf of Metrobank, thank you again for giving me the opportunity to speak to you. And I hope you'd have a fruitful day. Thank you.
All right. Thank you, Mr. Tansinko. A lot of insights there. So our program, our event is streaming live in various social media platforms. And we have opened this to a Q&A to the viewers in social media. I would like to read one question to Governor Jokno and probably to the rest of the reactors, Mr. Tansinko and Ambassador. There's a question here from Marty Panganiban. What is the effect of the current state of COVID in the Philippines to our economy for the rest of the year? Does the 2021 recovery forecast consider vaccine availability or unavailability? Governor Jokno?
As I said, we have to learn to live with the virus. I think the worst is over. I think we have now built enough capacity so that whenever there's a maybe not a wave, but higher incidence of the COVID-19, we won't impose lockdowns anymore. There will be targeted, say, barangay level lockdowns, but no more national lockdowns. So we are now on the way to recovery at this point. That we have hit the second quarter. To me, that's the worst quarter, but we're now moving towards a recovery.
All right. Yeah. So, yeah. All right. So thank you, Governor Jokno. So there's another question here. No? So what about employment? No? What's your forecast on unemployment? No? So Ambassador mentioned 7.3 million unemployment in April. So Governor Jokno, do you have any forecast on unemployment?
The numbers, the official number is 17.7%. That's the April number, but that's the worst, right? That is that was during the lockdown, nationwide lockdown. So that is not reflective of what it will be for the whole year.
Yeah.
And so I'm waiting for the July numbers, which will come out in August, and I'm sure it's not going to be 17.7. So we just have to be more hopeful that things have started opening up and that more people are going to get employed. And in fact, that should be the focus of the national government's efforts to, for example, by helping the micro, small, medium enterprises, you're going to also to help the employment. It's easier, for example, to create jobs in the agricultural sector, in this MSME sector, than in the maybe in manufacturing or in build. But build will go on. That's already well funded and will not stop. I mean, that's like there's careful planning. Each of those projects will give at least an economic rate of return of at least 10%. Some will give an economic rate of return of 25%, 30%. So those are well selected projects. They are well prepared and they are now go. And in fact, some of them will be due for completion next year and in 2022. So let's not stop the build. That will create a lot of jobs right now, and it will make the Philippines stronger after the crisis. So lots of things. Construction is going on. I think activities in the PEZA area is also picking up. So that 17.7 unemployment that we saw in April is not going to be reflective of the whole year.
All right. So yeah, there's is Ambassador still with us? No, Ambassador. Any insight on the unemployment from PCCI? Okay. Yeah. So let's move on to the next question, Governor. So you showed some figures showing that we have a sound and stable banking and financial system. There is news recently that BDO posted a rare loss in Q2. What does this signal to the rest of the years and to the financial services community? So Governor Jokno and then Mr. Tansinko, you can also comment on that.
No, we have done some evaluation on the part of the BSP, because the BSP really has prepared the banking industry as a result of the Asian financial crisis and as a result of the GFC. And so the second quarter performance of BDO is precisely because of the lockdown, right? It's not, does not reflect the whole year's activity of BDO, and also because they put a lot of money in provisioning. That's a defensive move, all right? A defensive move. It's not truly reflective of their financial position at the moment. We have done some stress testing, and this is not going to be like the Asian financial crisis. The NPL of banks is slightly above 2%. And unlike in the Asian financial crisis, where it was close to 4, and then after a year or two, it ballooned to double digit. It's not like that. I can assure you, we've done the stress testing, and our banking system is sound and strong.
All right, thank you, Governor Jokno. Mr. Tansinko, any insight in the banking community?
Yes, thank you. Thank you for that question. Provisioning is an anticipatory act of the bank to protect its balance sheet from further stress. And I think that BDO did the right thing. And if you look at their what they said, it was in anticipatory provision. And I think that the whole banking system is doing that. So don't be surprised if banks do a lot of provisioning. Recently, JP Morgan announced also a huge provisioning. Citibank, global banks are provisioning, and that is the right thing to do. And I think banks have learned from the financial crisis in '98, wherein the crisis actually hit in 1998, but the worst of it happened in 2001, when most of the credits defaulted. So while earnings are strong, I think that it is really prudent for banks to build its war chest of provisions so that it will keep its balance sheet intact. And I feel that the bigger the provision a bank can take right now, the stronger it can protect its depositors. So I'm very positive and very optimistic. I think even the market took it very positively. The shares of the banks have actually held up despite these large provisions. So don't be worried with large provisions. It is anticipatory, and it is to protect our depositors and our stakeholders more than it is a sign of problems to come.
Thank you, Mr. Tansinko. Another question from our viewers, from Jay Baksal. So kudos to Governor Jokno. So the macro perspective is being laid well. How do we cascade these financial policies and positive outlook to reach consumers and MSMEs? So Governor Jokno, any insight on this? And then Ambassador Yuhiko, you can also comment.
We have actually given the banking industry, especially the micro, small, and medium enterprises, a lot of relief measures. For example, one of our innovative measure is to consider or allow the use of new loans to micro, small, and medium enterprises as part of their compliance with the reserve requirement. And as a result of this, this is on top of the cut in the reserve requirement. As a result of this, the recent numbers show that about 90 banks actually lent out something like 70 billion pesos for the micro, small, and medium enterprises. So we're helping the banks so they can help their clients. Right? That's basically what we've done.
Okay, thank you, Governor Jokno. Ambassador, do you have any insight on this? How does this cascade to MSMEs and consumers?
Well, this is not my opinion, but I have actually just finished my survey of all of over 100 chapters all over the Philippines. And they are still complaining that the banks that they will deal with are not really helping them at all. So I said, are you sure? Because I know Governor Jokno has already given a lot of incentives to the banks so that they will put down interest rates or defer in case of restructuring. But sorry, Governor, not one told me that they are being given the benefits of what you have already given to the banks. That's what they told me, because this is a very critical issue for them, the financial support from the government, particularly BSP. And I told them, yeah, I keep on telling them, no, I know that already the loans to MSMEs is now counted as part of the bank's reserve requirements. So somehow this has to translate to the loans to you and so on and so forth. Sorry, but the report from the field is that it has not yet filtered down to them.
Thank you, Ambassador. So, last question to Governor. So, could you comment on President Duterte's SONA earlier this week? So, there was an allusion to the creation of an asset management company.
Yeah, we're that's part of the so-called FIST. Okay, that's similar to what they've done as a result of the Asian financial crisis. We are going to create an asset management corporation where banks may then transfer some of their non-performing loans, so the banks can then be healthy again, or in case there is some problems, and they can resume their useful duty, which is to intermediate between depositors and borrowers. So that's a way of improving the financial situation of those banks which are having problems with some of their loans. So we are strongly supporting that bill, and the idea is to give that asset corporation some fiscal incentives so they will be encouraged to absorb some of the non-performing loans of commercial banks.
Yeah. Another question, Governor Jokno. Do you have any reaction on what was not said during the SONA, particularly federalism?
I think at this time that is the least of our worry. I think we have to be focused on the pandemic, and that we have to think of other measures that will make the Philippines stronger after this crisis, and we have listed some of those measures. I think every day counts. I think we should really focus on the things, and we have a long list of legislative action, and unfortunately, that federalism is not part of that list.
All right, great. All right, so great insights from Governor Jokno. I believe you need to attend another engagement, Governor. So thank you very much. But we have some questions from the audience, to the rest of the reactors. So, Ambassador, there was a question earlier. What's your prospect on unemployment and during the rest of the year and even next year?
Well, for unemployment, I see that it will continue to get worse. That is the report I'm getting in the field. Unless business actually opens up with certain degree of safety, medical safety, and so on and so forth. So the consumer confidence is not there. People don't, even if, for example, the malls are open, they're not going to the mall. So until such time that the consumer is confident again, we will not see the level of business going up. And if that's not going to go up, then we are not going to see employment figures back up as well. So the key here is consumer confidence. The key is businesses to recover slowly. And the key is for us to manage the COVID crisis. And all of this together will actually bring back the employment.
All right. Yeah, thank you. So, Mr. Tansingco, any insight on consumer confidence? What do you see in the horizon?
Yeah, I think that consumer confidence requires a view of how your next paycheck will come. So the consumer confidence will come when we can secure people's future and give them some certainty. And I think that the best way to do this is to reconfigure our businesses to give that people some certainty. While I'm very happy at the programs that are being initiated now about these doleouts, I think nobody is really confident that this will continue forever. So I know that opening up businesses is controversial now, but in one form or another, we have to do it. But for us in the business community, we also have to rethink the way we do business to give people that certainty and to bring back consumer confidence. So it will come once we see a light at the end of the tunnel, and I hope that we can provide it to our people soon.
All right, thank you. So our program has come to a close. So we would like to thank our keynote speaker, BSP Governor Benjamin Jokno, Reactor Ambassador Benedicto Yuhuico, and Reactor Mr. Fernand Antonio Tancinco of Metrobank. Thank you very much, gentlemen. So we would like to thank our sponsors as well, CoExstar, Metrobank, ATC, and our supporters, Citibank, Hungry Workhorse, as well as Metrobank. And thank you to Manila Times for hosting this timely and relevant forum. So thank you, everyone. And, stay safe. And, let's be positive with the outlook of our country. Thank you.
Thank you. Bye, Dante. Bye.
This can be you. Or this too. You may not see the possibilities just yet, but we do. At Metrobank, you have always been in good hands. We want to show you new opportunities. Open a brighter future. Spot potential. And be the bank that can move with you. Change with you. By being with you every step of the way. That's meaningful banking from Metrobank.
Tech Corp is an emerging financial service provider. We offer various digital payment solutions to multinationals in Metro Manila and soon to the whole country. We believe that change is constant, so innovation is always necessary. By integrating blockchain technology in our offerings, clients can enjoy our fast yet secure financial services at competitive rates. ATC Exchange is a soon-to-be-launched digital currency platform where clients can buy and sell cryptocurrencies such as Bitcoin. Investing in digital assets made more accessible and convenient. ATC Remittance App is an application dedicated to efficient money transfer and bills payment. Through the ATC Remittance App, clients can top up to their account to transfer money at their own convenience. Download the ATC Remittance app now and visit atcex.ph to start your digital journey.